You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. If you trade options, you've got to ask yourself, why would you choose an options trading platform that puts investors first? At public.com, there are no commissions or per contract fees. And more importantly, it's the only platform where you can earn a rebate on every single contract traded. That means you can save on your options trading costs and keep more of your capital in play. Whenever you trade options on Public, your savings are automatically applied. So, don't change your strategy, change your platform, and see the difference in your bottom line. No commissions, no per contract fees, and it's the only options trading platform where you can earn a rebate on every contract traded. To learn more, please visit public.com/optionsbootcamp. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. That music means we are back once again. Time to roll out the hats and the whistles on the old Options Boot Camp drill instructor proving ground once again, because it is time for everyone's favorite day of the week. Yes, Education Wednesday. My name, of course, Mark Longo from theoptionsinsider.com. Back from my sojourn to the Southern studio last week, listeners, getting the scoop, getting the latest on all the hot breaking news from the world of options and derivatives, including a lot of back and forth on Bitcoin options that we found out right at the end of the week as soon as I turned off the mics down there at the STA National Conference last week, that the SEC had approved them heading into the weekend. So a lot of hemming and hawing on that, of course. A lot of other topics lighting it up. A new exchange joining the fray, all kinds of fun and controversy in the world of options and derivatives these days. You've already seen a few of those episodes hitting the pro side, some of them hitting the broad network as well. So if you want to check all that out early, as well as, of course, Options Oddities, a great pro Q&A. We just had another one yesterday with Mr. Kevin Green, a great mind in all things futures and everything else. So that was a fun one. You want to get access to the Pro Trading Crate, which is coming up in a couple of days, listeners. So get your hands on the September Pro Trading Crate. Only one place to go, theoptionsinsider.com/pro. The place to go to get all those goodies. As we go around the horn and see who's joining me on the old OBC today, I am pleased to say that the streak is intact. As once again, we are beaming in to the options mecca known as Frankfurt, where we are joined once again by the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the show. How was your week in the options mecca while I was sojourning for the benefit of the listeners?
Oh, not so bad. Just creating new webinars, new online trainings, and it's been great.
You know what else is great? When we get the pulse, the feedback of the audience. Our producers are doing a little bit of digging, because how many shows, Dan, can go back over a decade to look at what our listeners were thinking about way back in, let's say, 2012. That's exactly what our producers did today for a little bit of fun. Because again, a little bit of a flex. How many shows can do that, listeners, at the end of the day? Let's go all the way back, Dan, to the halcyon days of May 17th of 2012. Man, we were 8 years ahead of the pandemic, just coming out of the great financial crisis. Seemed like things were looking decent on the horizon. And on that auspicious day, Andre K7 threw in 5 stars in iTunes. He just said, great program, thank you. You know what? Thank you, Andre K7, and everyone going all the way back. We don't thank our long-timers enough. Thank you, all of you who have been supporting the show from the beginning. It really has helped it to keep rolling all of this time. Mr. Dan, what do you say to a little bit of decades-plus love from, decades-plus old love, I should say, from Andre K7, sir?
Wow, man, I'll tell you what. I mean, that really is kind of an honor, isn't it? Yeah, thank you very much for listening, and I appreciate you writing in.
Gotta love the folks. You are the reason we do it at the end of the day, whether it's 2012 or today, and why we're heading right on into the options drills.
Holy mooch! Time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
All right, listeners, let's do it. I'm powering through here. Got some lozenges to keep the throat going. Let's dive into a little bit of the old options drills. Of course, the portion of the show where we take an options concept or technique and maybe dive into it in a little bit more detail, explain how the pros utilize it, maybe some of the subjective uses of it, which I think we're going to touch a little bit of the latter on today, because Dan, today's options drill segment was inspired by a question from listener JMC. And he or she said, hey, heard you guys mention the, quote, guts of spreads a few times. Can you explain what you mean by this? Yeah, you know, Dan, sometimes we bandy about terms here, somewhat loosely, somewhat willy-nilly. We just throw out things like, oh, it's the guts and all this. And maybe sometimes we don't stop to explain exactly what we're talking about. So let's do that a little bit today. The guts, I recently, Dan, I was at an event, and I heard someone refer to the guts of a butterfly also as the thorax, which brought a smile to my face. You don't hear that one too often. I think I heard that a couple of times back on the trading floor. But I guess we can expand the scope of our conversation, if you really insist, Dan, to include the guts/thorax. But when I mention those two terms to you, what springs to mind, sir?
It springs to mind that I have never heard anybody call it a thorax. That's crazy.
You know, you can never hang out with too many entomologists, I think, at the end of the day. Bugs are great.
Yeah, apparently that is correct. Or maybe you're hanging out with too many.
All right, sir, what's catching your eye out there in the land of the guts? I'm going to start calling it thorax now, just to drive you crazy.
Right. Again, not thorax. So if you look at what comprises a butterfly, or a condor for that matter, you've got, you know, long option, 2 short options in the middle, whether it's same strike butterfly, different strikes condor, and then long strike, right? And it's very, very common to hear people talk about, oh, the wings, you know, the wings are the long options that are on the outside. And apparently if you look at a P&L diagram after eating a lot of mushrooms, it looks like a butterfly or a condor, which I advise you not to do.
Are you implying that people in the early days of options in the early 70s were on some sort of hallucinogenic substance? Is that what you're implying here, sir? How dare you?
I'm just trying to connect the dots here, Mark. Just trying to connect the dots. So if you got the wings, like what's on the inside? Well, they call it the guts. It's just that center part of this bird or insect, or you know, whatever the description is. But it's just a little it's a nomenclature for the middle strikes.
Also known as the thorax, which I heard is a very popular term and is up and coming these days, Mr. Dan. Now, I can maybe see your point about the hallucinogens when you're getting to, like, you know, iron condor, iron butterfly. That certainly sounds like some folks were partaking when they named those. The guts / thorax, I don't know. Maybe there were some entomologists hanging out back in the early days of options, listeners. So if you're one of the handful of crazies who goes by thorax, hey, we don't judge here. Well, Dan might judge. Dan's kind of a bitter guy. He might judge. I won't judge, listeners. Call it whatever the heck you want at the end of the day. Terms are flying fast and loose in the world of options. Let's look at a very specific example from the butterfly lens. Then I'll get to a more subjective use case for guts, which is interesting as well and very rare. All right, let's get out to butterfly, everyone's favorite XYZ is trading $50. You know the deal with the butterfly. It's trading $50. Maybe you think you want to get a little bit of directional exposure to the upside. You go for a call fly. You buy the XYZ 50 call for $3. You sell 2 of the double the 55 calls against it for $1.50. Now you're flat, obviously, on your outlay. And then you buy the 60 call against it. So your net outlay is 50 cents. The 2 short 55 calls that you are short in there, that is the guts, aka the thorax of I'm gonna keep hitting on that of this trade. So very specific use case. If you hear somebody talking about guts, it's usually in regards to these types of spreads with wings, and in which case you got the guts hanging out in the middle. Now, Dan, one of the reasons I wanted to make this an options drills is because, you know, back in the day on the trading floor, sometimes you'd have brokers come into the pit and they would quote you weird stuff. And once in a while, you would get, let's say, a guts strangle or like a guts fly. Does that sound familiar to you, sir?
Oh, yeah. Oh, yeah, for sure. For sure.
All right. So this is obviously a much more rare use case, highly subjective. You're probably not going to hear about it much anymore. But Dan, if someone came into your pit back in the day and said, hey, I want to quote myself, a gut strangle, what are we doing? What are we talking about?
Yeah. And, you know, it's funny. I guess I hadn't really thought of it because it's really not the same thing as what I just described, but they use the same word. So, yeah, like a guts strangle is like, okay, I mean, think of what a strangle is, right? Whether it's long or short, it's out of the money call, out of the money put, right? Typically, as retail traders, we're more apt to buy them, but some retail traders sell them. And, like, why do you do that? Well, because, you want the underlying to move. Well, what if you bought an in-the-money call and an in-the-money put? That would be kind of weird, right? Lower strike call, higher strike put, the opposite of what you would usually do. Well, from a synthetic standpoint, they're actually identical, right? Because if I buy a call and short stock and I buy a put and buy stock, synthetically, that's like buying put and buying a call, right? Because the long stock and the long stock and the short stock are a wash. They cancel each other out. So they call it the guts. And this one actually makes sense. No hallucinogenics needed for this one. They call it guts because it's heavier. Actually, that's probably like in this day and age, I'm sure somebody's going to be mad about that. But I think that's why it started. And if that's the only thing you can be mad at as far as floor traders go, you've been living a pretty secluded life.
Yeah, floor trading, not exactly the most politically correct endeavor ever undertaken in the history of man. But you're right, every once in a while a broker would come in quoting one of these. It would be weird even back then, listeners. So I'd be surprised if you encountered it on your retail forays through the online world of options. But you know what, since we're talking about guts, we'd be remiss if we didn't talk about this as well. Again, it's kind of just flipping the script. The strangle is probably the most common example, but you could do it with other spreads as well. Let's go the same way. Let's say XYZ, trading $10. You know the deal with the strangle. Usually you want to buy out of the money calls, out of the money put against it, give yourself some room to run. You think the stock's going to run. $10, in our example, you buy a 1 month 11 call, let's say 50 cents for that, and the 1 month $9 put, 50 cents for each of those. Total outlay of $1. You obviously need the stock to move over $1 by expiration to break even on that trade. Pretty straightforward. That's your typical out of the money strangle, which is the way 99.9% of people are going to trade these things. Once in a while, you get an odd duck who comes in and says, you know what, give me the guts strangle instead. So let's flip it around a little bit. Again, XYZ trading $10. Instead of buying that 11 call, so that $1 out of the money call, you're going to go in the money now. You're going to buy the 9 strike call, which again is exactly $1 in the money. So let's make those $1.50. because you have $1 of intrinsic value, obviously, and then 50 cents of what we just determined what the at the money, or actually out of the money strikes we're trading at there. So they should be trading for more, but we'll go for $1.50 to make our lives simple here. So you're going to buy the 9-strike call. In our example, is going to cost you $1.50. And then you're also going to buy the 11-strike put. Again, $1 in the money options in each case. Both of them are going to cost you $1.50. So you're shelling out a total of $3 now. So you could see the difference right there. $1 versus $3. Much more capital intensive. Now, there are some benefits to doing it this way. Obviously, you're getting a higher delta option in both directions. So you get that very meaty call, you get that very meaty put. So if you start getting a run, you're going to participate more. Obviously, it's going to cost you a lot more as well. You're talking roughly 3x the cost versus the traditional out-of-the-money strangle. And obviously, you need that stock to run even more now to break even on this strategy. So if you're paying $3 for this gut strangle, so you obviously need that stock to run to the upside or in either direction. In this case, let's go upside. You need it to run effectively to $12. That's when that call would be at break even. So you need more room to run to cover this thing. It's a strange strategy. You're not going to see it too often. A lot of times people will sell them. They will go the other way because I think the reason is obvious. There's much higher premium involved in this. You're selling an in-the-money option on both sides. Now you're playing kind of fast and loose there. You need this underlying, in this case, XYZ, to just sit at the 10 strike and not go anywhere because you're selling 2 in-the-money options against it. If it starts running, you're going to feel that pain pretty quick. But as I think back, that was probably the predominant use case we used to see. People just looking to harvest a little bit more premium out there, and that was when they would come in and quote a gut strangle. And this was a fairly rare occurrence. If we heard this once in a couple of months, that would be frequent. So not exactly a hot thing, but we can't really touch on the concept of guts without talking about that. Dan, anything to add on the juicy world of the guts / thorax, as the kids are calling it?
No, yeah, I guess it is interesting that there's kind of two different things, uses of the word, but yeah, just remember that. And you know what, you're never going to trade a gut strangle. I mean, as market makers, we did just because somebody had some reason to do it, and who knows? There's all kinds of different reasons. Maybe they happen to accidentally have it on from a legacy position trying to get out of it, but you're never going to do that. So you can probably just forget that one. But, it does help when you're talking to your broker or, you're in like our chat room or something, talking to other people, and you're like, oh yeah, I'm short the guts at these strikes. It's just easier to have people know what you're talking about. Like with anything else, the vocabulary is the hardest part of learning anything.
Yeah, the vocabulary is half the fun. Some might say it's all Greek to me, Mr. Dan out here. So this is, again, kind of an esoteric thing, but hey, ask and you shall receive at the end of the day, listeners. And we couldn't touch on the guts without talking about both sides of it. And you're right, that's what also makes it weird, Dan, is that there are two things with the same name that are almost completely unrelated. So that's what makes it confusing for people out there as well, which is, again, rare you're going to encounter the latter definition, but just in case, forewarned is forearmed at the end of the day as we keep on rolling right on into a little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, listeners, welcome to the mail call. Before we get into your questions, I know you've been waiting for it with bated breath. I missed it last week. I know you missed it as well. It's time to get the market taker question of the week.
And now, it's the moment you've been waiting for. It's time for the market taker question of the week.
All right, Mr. P, the floor is yours, sir. What you got for us this week?
Okay, I actually had this conversation with somebody earlier this week, and the person said, actually, this wasn't this person's question. This is my question. The person said, oh, well, obviously the most important thing with any trade is that the stock, does what you need it to do. And I said, I would go as far as saying that that's probably the least important part of any trade. And he looked at me like I was crazy. And he said, well, what is the most important thing? I said, well, it's that you get edge on your trade. Because trading is really just managing, like pulling money out of a sea of uncertainty. And stocks are going to go your way. Stocks are going to go against you. That's not really what it's about. What it's about is setting up a system that either has more winners than losers and or has bigger winners than losers. Two different things that are very related. And when you get it so that you're going to have winners, you're going to have losers, but you end up knowing with confidence that if you keep doing this thing, you're going to make money, there's the ticket. It's having an edge from having a solid trading plan.
All right, let's see if we have an edge in our questions of the week. Listeners, last week on the show, we asked you, Bitcoin's been hot of late. We said, hey, Bitcoin has lived many lives over the past decade. Now we have quite a bit of data under our belts, but the debate still rages. What role does Bitcoin really play in a portfolio? Gave you three choices, and the infamous other: digital gold, uncorrelated asset class, just another tech stock or other. And Dan, our audience came down pretty much exactly tied, about 33% each for uncorrelated asset class, and then just another tech stock. Come in number two, 25.6% was this digital gold, and other got 7.7%. Dan, are you surprised that our audience can't make up their mind on this either?
No, you know what? I'm really not surprised. I mean, this is, you actually phrased it in like just the perfect way here, Mark. Hate to give you a compliment.
We are wordsmiths over here, so I don't know.
But yeah, it kind of has lived many lives. And yeah, it's to the point where I don't know what the hell to make of it. You got Web3, and I know that it takes that a long time to come around. I mean, last time I got a little excited about it is when I was, they were talking about, it's really going to be for applications for Web3. Clearly, it's not uncorrelated. Well, I don't know. I don't know if you're asking my opinion, but digital gold. No, that for sure it's not. Uncorrelated asset class. Well, not just purely by definition. The mysterious word there is asset. Like, what is it? So just another tech stock. Yeah, I mean, I would equate it more to a stock or a commodity or a commodity if it serves a purpose. Not as a company, like serves a purpose for Web3 or something, like is built onto a blockchain to perform a certain function, like smart contracts or something. So, but I mean, like, how much is it really being used for anything practical right now? Is it? I don't know. Maybe it is. I got bored with it a few months back and stopped really following it. I don't know.
Yeah, it's a contentious one. I'm with you. I kind of thought the digital gold thing went by the wayside when we saw rampant inflation and gold doing well and Bitcoin not so much. So that was if it's an inflation hedge, it didn't perform when it was supposed to. But that's kind of the story of Bitcoin. It moves in weird fits and starts during different periods, and it all depends on your frame of reference. These days, it's mostly highly correlated to the high tech stocks out there because that's who's slinging Bitcoin and also a little bit of high tech out there. So it's an interesting one. This week, we're all on those same lines, listeners. We said, hey, ask and you shall receive. After months of waiting, the SEC finally approved options trading on the Bitcoin ETF from BlackRock. This is ticker symbol IBIT, listeners, IBIT. We said, quite simply, do you plan to trade IBIT options when they are listed? Heck yes, hell no, or I prefer something else. Could be BitO, BitX, whatever you want. Dan, are you in the heck yes, hell no, or I prefer something else camp?
I'm a wait and see. It honestly didn't really register all that on my radar, TBH. So I'm definitely not a heck yes, but I mean, I won't say hell no. Maybe add another choice, like, maybe. We'll see what happens.
We'll call it the pass early choice. Shrug your shoulders. We'll see. Right now, our audience, they're down for it, Dan. 73.3% saying heck yes. 26.7% saying hell no. And 0% right now if they prefer other products. So interesting out there. Speaking of interesting, let's get to some of your questions right now. This one, Dan, if my throat wasn't so sore, I probably would be able to laugh harder. This is definitely our handle of the week. Pancho Bob Villa, Dan. I like that. You're going to kill my throat, Pancho Bob Villa, but that might be the best handle we've gotten in some time, Pancho Bob Villa. So he's running around Mexico with this squad of banditos / revolutionaries and also fixing homes. You know, he can do both. He's a multi-talented person, that Pancho Bob Villa. After that handle, I got to see what he has to say. He says, hello, Mark and Sergeant Passy. Oh, he's going for your beloved nickname, Mr. Dan. Sergeant Passy. I've been listening for a couple of years now, but still haven't made my way through the entire back catalog. Yeah, I get you. We're just talking about reviews from 2012. There's a lot of content there, Pancho Bob. Take your time. He says, I've heard you talk about both of your histories as options market makers. If you had to spell it out for us noobs, again, you're not noobs. You listen into this show, so you can't call yourself a noob. What was the best part of that experience from a training or preparation standpoint? What was it that you learned about options trading that you really couldn't learn anywhere else? Asking for all of us who can't follow in your footsteps any longer. Well, I've said this before, but for me, it was very much analogous to, they say, you know, the best way to learn a language is just immersion training. You want to learn Italian? You just go move to Italy, or you spend a few weeks in Italy. You're going to sink or swim, right? You got to figure out how to get to the bathroom and order food and all these things, or you're going to go hungry and not be able to go to the bathroom. So eventually you'll figure those things out. And that's analogous to what was going on with market makers out. They kind of just threw us into the deep end of the pool. Obviously, they trained us. I had, a year plus worth of training under my belt before I went out there and had to break into a pit. In my case, the SPX pit. Oh, what a joy that was, listeners. We talked about that before on the show. Just, 21, 22-year-old kid just breaking into this giant pit full of hundreds of people who did not want you to be there, and let you know very, very, very vociferously throughout the day. But I digress. For me, it was this immersion therapy where you got in there and you were putting on trades. People think of, market makers today as more prop traders. They're putting on the trades that they want. Different game now. Back then, it was really more of providing liquidity. It was really making markets. So you went in every day. You had no idea what you're going to get hit on. You probably, when I was out in the equities, you're probably going to get hit on people wanting to sell a bunch of out-of-the-money calls and buy a bunch of out-of-the-money puts. So you had to prepare for that in advance by getting your skew in position to survive that onslaught for the entirety of that option's existence. Out in the indexes, there was all sorts of weird, funky 1x3 by 5 swaps quoted and things like that. So for me, it was just the sheer variety of things that were thrown at you that you had to make a market on pretty quickly. You had to be correct, or the people around you would trade with you because they were merciless. You said the wrong thing, sold to you, or buy them, So it was one of those kind of environments. You definitely learned very quickly if you were wrong. And then you had this position that you never wanted walking in. I don't want to buy this funky 1x5. Now what do I do with it? And figuring that part out, the risk management part, legging out of a piece here, laying off a piece here, maybe against a trade that was resting in the book, or all sorts of other things. That was where, to me, the rubber really met the road from the training perspective, and that was really something you just couldn't get anywhere else. Dozens, hundreds, thousands of positions were thrown at you a week. And it was up to you to make money on them, get out of them. Otherwise, you weren't there for very long. So a very Darwinian place to be. But from that perspective, just things being hurled at you all day long and having to just deal with it, there's not much like that now. I mean, you could go, I guess, as a retail person and just pretend that you're taking down all these crazy trades. I don't recommend that. That would be very dangerous to your P&L pretty quick. So yeah, it was an interesting time. Dan, for me, that is the thing that stands out. That kind of immersion training where you really had to sink or swim, and also the learning of risk management on the fly because you kind of had to.
Yeah, I was thinking about that. What was the best part of that experience? And I just kept saying in my mind, "Don't say coke and hookers. Don't say coke and hookers. Don't say coke and hookers."
That was after the close, sir.
No, but training and pepper. I'm just kidding. Obviously,
you're on some special sauce today, sir.
All right. I digress. I'm sorry. I know this is a family show, but kids grow up so fast these days. I'll tell you what, man, that is one of the things you said, or at least alluded to. I'll give a kudos to and even expound a bit upon. I would for sure say that managing trades was by far one of the biggest things, because like Mark mentioned, like you just get stuck with these trades. It's like, here you go, now what are you going to do with it? I guess that, and maybe one of the things to add a new thing to the mix is just this having a plan and having confidence to follow the plan. Because as a market maker, like, you learn, basically this one skill, which is probably why there's so many market makers who make, hundreds of thousands of dollars in a short period of time, more, millions in a lot of cases. And then they leave the trading floor and, they think they're qualified for anything, but they can be a bartender. It's like a extremely unique skill, one that can make you a lot of money, but an extremely unique skill. And so, that's a plan. And you get that plan down so tight, so well through the process of making so many trades that you just know what to do. You see a trade, you say, buy it or sold. Whereas I think now with a lot of retail traders, the plan's not as tight as it needs to be, and they haven't run enough trades through said plan to build that confidence, tighten it up, and build more confidence. And so, I think that's a big part of it too.
All right, listeners, that music means we're coming up against it for this week. Let's get out of here with just some words of love or inspiration, perhaps. This comes from another good handle, Theron Mathis. I like that. Sounds like a sci-fi character. I like it. He says, just figuring out the world of options. My brother is doing well and trying to learn. Well, I'm glad to hear your brother is doing well, Theron, because I appreciate what you are putting on Twitter. Learning can be a grind, but it's helping. Yeah, it can be. It's a long slog. But you'll get there. Obviously, people have been listening to this show since 2012 and beyond, Theron. So you got a ways to go out there. But glad to hear you and indeed your brother are figuring it out. And if you want to figure out more, you know where to go, listeners. Public.com/options bootcamp. They have a brand new URL for you folks to kick the tires and light the fires. Very easy, no cost way for you guys and gals to support the show. At the end of the day, Public's loving what they're hearing from you folks. They're loving the feedback they're getting. They're loving you guys and gals kicking the tires and lighting the fires on their platform and indeed on their rebate. The place to go to check it out for yourselves, public.com/options bootcamp. Guess what? That tells them you're coming from us, and that goes a long way to helping to support the show at the end of the day. And Dan, if folks want to head on over to a little bit of MTN, easy for me to say, MTM land, where should they go? What should they do?
Yes, you always know where to find me. MarketTaker.com. Market as in stock market, taker as in take what is rightfully yours. 2 T's in a row. MarketTaker.com. And join our chat room for free. Hit me up. DM me. I can answer any question you ask. As truthfully as I can.
Don't forget the second T for Theta. MarketTaker.com. 2 T's, the place to go to kick the tires and light the fires. That is going to do it for us on OBC, but fret not, loyal listener. Even though my voice is holding on by a thread, the producers say the heck with that. Full steam ahead onto our newest addition to the network, listeners, which will be hitting us in about 24 minutes here on the live feed. If you're listening on the on-demand side, just hit next. After you listen to OBC, you'll get a hot, fresh new episode of the Futures Rundown coming at you. We break down all the action in the world of futures, tackle some of your questions with some great guests and a whole bunch more. Another reason why you should be subscribed to the full feed, listeners, because that gets you access to awesome new shows. 17 and a half years, and not just still going, but still growing. So Check out the Futures Rundown and all the other nearly dozen shows on the main network feed. And then after that, I'm back more. Later today, I'll be chatting with the folks behind Rocktoberfest, a great charity helping kids throughout the third world who have lost limbs to landmines and things, helping them recover some new limbs, get some new prosthetics with the help of some folks in the financial market. So a great charity. We've supported them for years. I'll be chatting with them, I should say, later on today. Then back again tomorrow, of course, for our usual doubleheader. Actually, I'll be coming at you from the SIBO tomorrow with the Flowmaster. So maybe from the trading floor right above it. That should be kind of fun for a little bit of option block. And then after that, for This Week in Futures Options. Friday, of course, coming back at you for another doubleheader of volatility views and then options oddities. That one's exclusive for our pro folks out there, listeners. theoptionsinsider.com/pro. The place to go to learn about that. Then we're back again next Monday. Option block and crypto rundown all the way through to next Education Wednesday. Another episode of Options Bootcamp. Stay safe out there, everybody.
If you trade options, you've got to ask yourself, why would you choose an options trading platform that puts investors first? At public.com, there are no commissions or per contract fees. And more importantly, it's the only platform where you can earn a rebate on every single contract traded. That means you can save on your options trading costs and keep more of your capital in play. Whenever you trade options on Public, your savings are automatically applied. So, don't change your strategy, change your platform, and see the difference in your bottom line. No commissions, no per contract fees. And it's the only options trading platform where you can earn a rebate on every contract traded. To learn more, please visit public.com/optionsbootcamp. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.